Hey, everybody. Welcome. I am Carl Krauskopf, and we're going to get started in just a minute. We are working through a couple technical difficulties in learning this. So, appreciate everybody's patience. Super excited to be live and have this as a recorded event. All right, everybody. Welcome, welcome, welcome. Thank you so much. My name is Carl Krauskopf, and today we are starting a new live event where I'm going to be talking about commercial real estate. What we are calling this, what this is called, is the CRE Playbook, where we're talk about deals, strategies, and tactics. Now, this is going to be asset type agnostic. We're going to talk specifically about multifamily, at least on my experience. When we start bringing in other interview guests, we'll certainly be broadening that term. But really, what we are intending to do with this is to bring education around the commercial real estate space. Not only in, again, like I said, multifamily, but it's going to be agnostic in terms of the asset type. In terms of markets, right, we want to talk a little bit about, which markets are going to be the ones that we're going to focus on. Now, my experience is in Seattle, the Pacific Northwest, as well as some of the other Washington-based markets. However, as we get into this, as we unfold, we really want to be getting updates from other experts in the field that are outside of just this market. And so you'll start seeing us bring on new interviewee, new panels, and really get a good sense from other operators, other experts across the country, even across the world, that are investing in other markets, in emerging markets outside of the United States. And so again, the format for this is going to be weekly live updates. Right now, we're going to start off continuing to introduce the topic, the theme, as well as myself. Right, get to know me, the host of this podcast, the host of this live event, and really get to understand, again, Seattle market as well as some of the other markets that we'll talk about. Now, in terms of, again, style, format, we'll start bringing on interview panels, interviewee. So if you are a seasoned entrepreneur, somebody that is transitioning, somebody that is new into the investment space, I certainly want to have the conversation with you, see what you're doing in this space, and see what we can't learn from each other. Again, my name is Carl Krauskopf. I have been in the real estate space for about 5 years now, full time 2.5 years now. Prior to that, I was in corporate America. I worked 10 years, chief of staff in a corporate healthcare company. I'll get a little bit more into the details about that here shortly. But again, right now, primarily focused on buying, operating apartment complexes here in the Pacific Northwest with a specialty in Seattle, a growth market. Which is, as many are familiar with and may know, is that it's not necessarily the most landlord friendly market, not the most landlord friendly state, and so we do have some uphill battles to fight. However, I will say, and I'll argue, that Seattle is one of the best markets to invest in. It is difficult to operate, but it is incredible to invest in. Now, there's a clear delineation between the two. We could talk about that probably at another session, but again, just want to make sure that we're getting that on the radar. So, why am I doing this? Right? Why is always behind some of the big motivating factors? What's motivating? What's driving us to do some of these things? And so, what's driving me to start a podcast? What's driving me to start live events, weekly live events? Is really threefold. To educate others on the commercial real estate market. Right now, I am recording this on November 2nd, 2023. So we are starting to see a lot of movement, if you will, in office space, in multifamily. We're talking a lot about debt coming due, maturing debt, and a lot of stuff is happening right now in the capital markets. It was just yesterday that the chair, the Fed chair Powell, did again unanimously. They voted on continuing to hold and pause on the rate increases. However, they are not taking it off the books or chances, there's still a chance that they're going to raise rates. And so that's still putting everybody in terms of valuation, where our values at. Do I need to sell now? Can I wait another 6 months? Will things get better in 12 months? There's a lot of uncertainty. And so what I'm here to do is help bring to my audience, my friends, my family, coworkers, colleagues, acquaintances, people that don't even know me yet, a simplified view of the commercial real estate space as it relates to the macroeconomics. And then when we start going into those interviews, we'll start really getting a deeper sense from others local to the market, right? What's happening in their market, right? Because there is no national real estate market. It is very, very location specific. It is very local based. And so to say that the national real estate market is doing X, Y, or Z, it's a fallacy. Although that there are some common trends, common impacts that impact local markets. So we want to make sure that I want to make sure that I'm bringing that knowledge. What from a macroeconomic standpoint is going to impact your investments, your market. Nextly, it's going to be the next generation, right? So, I wasn't brought up in real estate. I wasn't brought up in investing, and so what caused me to do this? What caused me to jump into this? We'll talk about why I'm investing in real estate, why I love it as an asset, why I love it as an investment vehicle. But one thing that somebody, a good friend of mine, did was spend time in educating me, spend time giving me their education. That led into a self discovery, a self education route, a journey rather, to really understanding, who I am and who I can be relative to the investment space. So my goal also is to educate the next generation of investors. Now, next generation doesn't necessarily mean people that are it's age agnostic, right? This could be a seasoned W-2 employee who's in their mid 50s or low 60s or wherever you happen to be, and you want to understand how you can leverage the power of real estate to create wealth today and create wealth tomorrow. It's also for those folks that I just mentioned, right? Those that are coming out of college, those that are coming out of high school, whatever it happens to be, really help build that education early on, as well as everybody else that's in the middle, right? So corporate employees, non-corporate, self-employed, young, old, etc. So really want to hit the gamut in terms of who this is going to be for, and really drive that level of education to you. And then lastly, it's going to be right gaining knowledge from others, right? A lot of times when we bring on these guests, it is quite frequent. It's more frequent than not that you end up learning. You as the host end up learning something from the guests that you're bringing on. And so right now I'm already having these conversations with people, with folks, that operators from other markets, operators from my existing markets, and it's exactly what we would be doing on a podcast anyway. Conversational, exploratory conversations that really help better each other's business in a way that drives, whether it's referrals or revenue or market education, new ideas, something in anything that really allows us to better each other's business. And so again, that's going to be my focus as well, is educating myself as well as educating others that are on the podcast. So I said who this is for, right? We're talking to simplify that. It would be transitioning entrepreneurs, transitioning investors, as well as seasoned and new investors as well. So how you can get involved, there's a couple different ways. I would say first and foremost, subscribe to this channel, subscribe to these live events. When the podcast does get released, subscribe to the podcast, whether it's Spotify, Apple, or whatever your favorite podcast player is. Subscribe to that, refer it, invite others, really start spreading the word in terms of the CRE playbook is an opportunity for you to become educated and take your game up your game in terms of investment space. Lastly, if you do want to be interviewed, right? If you're somebody that's in the market, that's doing the work, that's actively investing, actively operating, or even if you're doing this as a side hustle, I would love to have you on the show. I'd love to talk with you, and again, gain knowledge, share knowledge, better each other's businesses. So with all that kind of structure, what we're going to do about what we're going to spend in the next a couple minutes on is just an introduction, a little bit more deeper into who I am, why I'm doing this, and what's coming next. So again, my name is Carl Krauskopf, and I've been in the real estate space for 5 years now, full time 2.5. And during that latter the first 2.5 years, I was working. There was the last portion of a 10-year stint in a corporate healthcare, chief of staff, director of strategy, and absolutely loved it for the most part. Towards the tail end of it, my wife and I, we started talking about having the conversation of, we want to have kids. What do we do? We knew this incoming expense was coming, but we didn't necessarily have clear line of sight to how we're going to make more money, how we're going to produce more income, right? In the corporate space, you can spend the next 12 months, especially if you're commission paid, you can spend the next 12 months in, working, performing for your clients, performing for your company. But, a lot of times your two mechanisms for increasing your pay are going to either be bonuses or promotions. And so for the bonuses, quite frequently, your bonus is also tied to your overall company's performance, not just your own, but your overall company's performance. Now, if the company does not do great, they're not going to pay out bonuses. If they do well, they're going to pay out bonuses. Now, that is what you are doing, but that's also what other people in the team are doing. And so, again, it depends on what company you're working at and your ability to effectuate change and effectuate performance, and that's reliant on your bonus structure. Next would be the promotions. Now, promotions are, depending on what kind of company, depending the hierarchy structure, it could be more or less difficult to get. Not only that, but it's also a lag time, right? We're talking 12 months, 18 months, whatever it happens to be in between promotions. And then, to talk about annual increases, I'm confident to say that don't keep up, just flat out don't keep up with inflation. And that's an accretive business. That's an accretive income model. So, I decided to look elsewhere. How else can we generate income? It wasn't stocks, bonds. It wasn't day trading. I was introduced to real estate. I was introduced to owning small multifamilies, duplexes, triplexes, and quadplexes. So that's where we started. Well, first we started with 6 months of self-education, right? Reading books, listening to podcasts like this, listening to audibles, and really just absorbing as much information that I could as possible that I could. And what that led to was my first purchase, my first small multifamily purchase. It was a remote purchase. I live in Seattle. It was about a 4-hour drive to to that property that I bought it sight unseen. Terrible mistake. And I ended up learning a lot of lessons, including evictions in the winter and rehabs and tenant screenings and the whole gamut. Needless to say, I ended up getting a little bit burned in terms of the work effort relative to the amount paid. But one thing that I did absolutely love were those monthly email owner statements that said, "Mr. Krauskopf, here is your distribution." It was somewhere around $1,200 a month. Now, obviously, I had to do reserves and a couple other payments from that, and so it wasn't a true $1,200 monthly cash flow. It was more so in the tune of 300. Still, it was great. Absolutely was great. I loved it. The only issue is that I, quite frankly, ran out of capital. So I started flipping homes and did incredibly well. I bought my first flip about 3 or 4 months after I bought that first flip. And it did really well. Made around $60,000. I had to do it creatively. I used hard money. I borrowed against my 401k, essentially liquidated the majority of the savings. And so it was risky, right? I also had a kid at the same time. I was also dealing with an eviction on that Spokane property, the Eastern Washington property. And so there was a lot of stuff going on. Certainly not something I recommend to the faint of heart, because again, it was just a super stressful time. Did incredibly well in that flip, right? Made it, like I said, made it about $60,000. I turned that flip into I bought three new flips, right? Carried forward the loan, carried forward the profits, and then carried forward the remainder of that equity that I had, and bought the three flips. One did pretty well, made about $35,000. One broke even, and then one was awful, right? I ended up losing about $56,000. Why did I lose $56,000 on one of my first flips? Well, turns out I ended up having I was victim myself, and the seller were victim of identity theft. So somebody came in, they stole the identity of the seller, they sold it to me fraudulently. I had to give the property back. I had already made improvements to the house via windows and roof and siding and things of that nature, but I had no claim against the true owner in it, because again, we were both victims of identity theft. Title insurance did pay out, thankfully, which did mitigate some losses. But again, I still had the cost of rehab, the cost of holding, the upfront origination fees, et cetera, et cetera. So it was not a great situation, but I continued forward. I continued pressing forward. So that is one of the key lessons, one of the key characteristics of any of the entrepreneurs out here is going to be persistence, determination, drive, right? What is driving you to do this work? Right. For me, it's generational wealth. It's being able to have and give to my daughter and her kids, etc., a life that I did not necessarily have, and that is what is driving me. Right. It's that, and then this what's next? What's next to come after the real estate space? Angel investing, technology, investing in technology, and so really being able to expand that wealth, that really being able to expand that wealth. Now, after another 2 to 3 years, I continued flipping. I was flipping six homes at one point. At the same time, I was building townhomes. I was building townhomes ground up, and what ended up happening was, I would just post on Facebook. I would post on Instagram of pictures of me at the job site and I would just have conversations with people. I'd started going to networking events and really just talking about what I was doing. And a lot of times what would end up happening is people would come and say, "Hey, I'd love to get into the real estate space. I have the money, but I don't have the time and I don't have the know-how." So that, from a deal trifecta, if you've heard that before, you've got to have the hustle, you've got to have the money, and you've got to have the time. So for me, I had the time and the hustle, but I didn't have the money to continue expanding. So I ended up working and partnering with a bunch of private capital investors, and those private capital investors really did help me scale up in terms of volume, scale up in terms of the types of projects that I was doing. So, as I mentioned, I was primarily focused on single family flips at the front end, moved into the development space. That is where I started syndicating and raising equity from friends, family. And then I moved into the phase that I'm in now, which is buying value added apartment complexes where we can go in and there's something is going on with the property, whether it's ultimately you've got either below market rents for one reason or another, or you've got an exorbitant management expense, whether or a deficiency in management. And so what I do it now is I go in, I source these apartment complexes, working with brokers, going direct to sellers, and as well as working with other industry partners like lenders, capital markets teams, title, escrow, those type of agents that I can really go in and I can start building out this deal flow, and that deal flow then in turn is also fed by you know I work with that deal flow in order to find new deals, put together deals that have some form of a distress, where I can again go and add value. Now, I do that again in partnership with limited investors, limited partners in a syndicated model. Absolutely love it. I love it. I'm able to offer an investment opportunity for my clients that can come in, that can passively invest in apartments. That also, I work with people who passively invest but want to become and or do what I'm doing. And so I am one of the pieces about this playbook is to continue to really be an open book, right? Open source, where I share my secrets, my knowledge, publicly, right? I'm broadcasting all of my secrets because, again, I'm here to give back to the community. I'm here to give back to transitioning entrepreneurs, seasoned entrepreneurs, and investors as well. So leading to where I'm at now, again, buying multifamily, we own a little under 80 units at this point. The primary focus is Seattle, core Seattle and north. I've got some other apartments out in central Washington. I've had some out in eastern Washington. And what I will say is that the market that I absolutely love is Seattle. Now, I love Seattle because of the tenant base, who we are renting to, and I am able and how am I able to choose those tenants? I can't really choose them, but I position myself to attract those types of tenants that work well, those type of tenants that pay, those type of tenants that pay on time. And I have not yet had to deal with an eviction, a late fee, or any of that stuff in my Seattle-based properties. In the others, yes, absolutely. I've dealt with evictions, I've dealt with late fees, I've dealt with all of it. But again, that's why I love the Seattle market. Is again the tenant base is incredible. Now it is difficult to operate. Right, we've got all of these restrictions around when and how much we can increase rent. But again, in my opinion, from what I'm seeing and experiencing, is that the tenant base allows us to operate efficiently. That also gives us, as the investors of these deals, an incredibly predictable path forward to getting and executing on our business plan. So I love Seattle. I'm certainly open to other markets. I've looked at other markets, but what I'm finding is that there's a lot of opportunity here in the city, and I'm going to continue to double down on this city. I'm going to continue to double down on this market and continue to expand here. Now, where am I going next? I'm continuing to hire talent, top tier talent. Now, I've got 3 employees, absolutely great. Right now, we're super focused on performing on our current assets, performing on our current projects, as well as lead generating, marketing, and really getting out in front of brokers. Again, getting back into that deal flow, getting back in front of potential investors, and that is the focus right now. And I absolutely love it. I think this is a great opportunity to invest. I think we're going to continue to see even better opportunities to invest. And we're positioning ourselves to buy. We're positioning ourselves to operate. Now, again, I hope that you've enjoyed this short live event, this short talk, and I would really love and appreciate anybody that's listening to subscribe. I'll be coming back at you on this platform weekly, and we will continue to expand our knowledge, expand our group, and continue to bring you value. Now, I appreciate everybody and look forward to speaking with you next week. Thank you.